What's up, traders? It's Matt with Conservative Trades. Good day in the markets today. Obviously, I'm not completely out of the hole from yesterday, but it's like I told you guys. We're going to take some base hits here. We're just going to pack on a little bit at a time. We did recover 25% of the loss yesterday, so tomorrow's another day. Hopefully, we'll pack on another, I don't know, $400 or $500, and then we'll just keep chipping away at it next week. Yesterday was I took a big hit yesterday, and listen. It was embarrassing to have to post that video, but I want to be transparent with you guys, and I want you to understand just the anomalies that can sometimes take place when you're day trading, and even if you have a really good, solid strategy. SPCE was an anomaly yesterday, and sure enough, just like I thought, I did go browsing through YouTube yesterday, and I checked out what some of the other day traders were talking about, and there were definitely some of the other really professional day traders out there that were also scratching their heads on this daily chart here. We ended this I don't know, this was the 18th. Yeah, we ended the 18th with a massive sell-off, losing 25% of its value. This is what you can almost consider a gravestone doji, okay? And then the next day, it just ramped right back up. And this is all news. This is all hype. This is all, I don't know, maybe pump and dumps. I have no idea. I can't remember ever seeing a stock behave this irrationally before. But that's kind of the takeaway from yesterday, really, is that stocks can behave completely and totally irrationally. And what I didn't do yesterday is I should have stopped. I should have gotten out. There was one point yesterday where I was only down about $700, but really I should have just seen the signs, and I should have gotten out. Doesn't matter that this stock looked like it was continuing to make the perfect setup. Every time it made the perfect setup, it went completely against me and did something completely irrational. So after seeing that a couple times, I should have just taken a hint. Okay, and then we would have been pretty much almost caught up today. But I don't know, guys. I want to be fully transparent with you, and I want you to get a very realistic view of what it looks like when you start to day trade. And it would be one thing if I already had a good solid account that was padded with thousands and thousands of dollars that I could afford to lose. That way, if I had a losing day like that, it wouldn't affect me so badly. But the truth of the matter is the vast majority of traders out there don't have accounts like that. Now, we all know, number one, don't ever trade with more money than what you're willing to lose, okay? Don't ever invest more than what you're willing to lose. I mean, that's just kind of like the number one rule of thumb for day trading, swing trading, investing, whatever. And really any kind of business venture, any kind of business venture that you take on, you don't ever want to put in more money than what you're willing to lose in case the business venture does not work out, right? But still yet, even if you fund an account with a few $1,000s, and even though you really would be able to afford that loss, you don't want to. And when you're starting out with a fresh account, you're looking to build a cushion. And you have to build that cushion so that you can get to that place where you can really fully and effectively trade your strategy. So, there's a lot that has to be done when you get into day trading. The first thing is just educating yourself. Finding some kind of a good course out there, or just, going to, spending days, weeks, months in Investopedia and reading articles and, watching YouTube videos and watching other people trade. And then after that, you're going to want to get into a simulator and trade for at least 3, 4, 5, maybe even 6 months, testing your strategy. And then you want to be able to have the kind of money to put into it that you could afford to lose, but even yet, you don't want to lose, but you got to have those funds, and you got to be able to get in and start trading with real money, and kind of get the handle of what all comes with that, the kind of mental discipline and emotional control that comes with that. And so, at least by posting these videos, you can see that these are very realistic type experiences. And when you get into the market, you're going to have days like this. Now, for some of you, losing $2,000 wouldn't be a lot. Some of you out there might be able to lose $20,000 and still be okay. All right. Some of you out there aren't going to want to lose more than $200. Everybody's got a different parameter of what they're working with in that regard. But the fact of the matter is You are going to have days like that when you're trying to build this account and you're trying to build that cushion. You have to be prepared. It mentally affects you. We can go on YouTube and we can watch our favorite day trading gurus all day long. We can watch them how they're constantly coming into the market every day and just knocking it out of the park. But you got to keep in mind, these guys have huge accounts. They're stacked. Okay, and it's not gonna bother them much, or it's not gonna completely rock their world if they lose a few $1,000. Okay, they don't want to lose a few $1,000, and when they have those days, they don't like having. Nobody wants to lose money, but it's just part of it. But the thing is those guys can recover. And a lot of those guys have chat rooms. They're getting paid off of subscriptions. They can continue to fund their accounts. It's not as big of a deal, and there's just a whole different mentality that you trade with when you're trading like that. Okay, as opposed to the average Joe like you or me who's coming in here and we're trying to build our accounts. We want to build our accounts. We want to get to that place to where, we can kind of just ease up a little bit on the pressure, and where we can really just fully and effectively concentrate or trade our strategy with the type of mental discipline and emotional control. When you have a huge padding on your account, that gives you a buffer for your emotional control. That helps you. That it just helps. It just helps. Okay, and so right now we're trying to get there. And so, admittedly, yesterday was not a help for me in that, and it's something that I think was good for you guys to see. Those of you who are aspiring to day trade. And it was good for me to be reminded that the market can slap you in the face sometimes. Sometimes, no matter how perfect the setups are, sometimes stocks do the craziest things and nobody can explain it. And that's what SPCE did yesterday. But today was a good day. And again, we made back 25% of that loss, and we're just going to keep chipping away at it. Tesla was a really good trade today. I got in with that, and I only traded, look at this, I made $474 alone off of Tesla. And that was with 20 shares. 20 shares, guys. You can see I averaged in right here. No, actually, I got out of it there, and I went back in. I short sold it at 900 when I saw that it was going to break the 900 mark, and then I shorted again at 896.99 in anticipation of breaking down through 895. And then I took the first 10 shares. I bought them back at 879. I bought back 5 shares at 872. I bought back 2 shares at 866, and then I bought back 3 shares, the last 3 shares at 872. So look, this just goes to prove that you can take a very small conservative share size. Guys, I did this off of 20 shares. I made $474 off of 20 shares. Okay, think about that for a minute. You don't have to take 1,000 shares of every stock. You don't have to take 100 shares. 20 shares. The most I ever take on Tesla is like 40, 50 shares. I'll never take more than that. It's a spready stock, and it makes big moves. And we just so happened to catch this one, and we had help from the SPY, the S&P 500. By the way, anytime you hear me say SPY, for those of you who are a little newer to this, that we're just talking about the S&P 500. And the SPY started pulling hard today. Look at this. Look at the daily chart here. It was due for a pullback. It was due for, it just kind of need to let out some air, right? And we saw that today. And a lot of stocks followed suit. So Tesla, look at this. Look at this drop. Look at how Tesla followed suit. Right here, followed suit. Look at NVIDIA. NVDA followed suit. Same thing. It all looks like the SPY. Here's the SPY again. Look at that. As a matter of fact, NVDA, I'll show you my trade on that. So I had actually gotten in pre-market. I think I only took like 40 shares. Yep, 40 shares short, and made a nice move down. I was actually up 150 some dollars on this at one point. And why didn't I get out? Because I was looking for a bigger move. I was looking for this to test down to the 305 to 300 areas. I was really looking to make about roughly around maybe $300 to $400 on that trade. So there was no reason for me to take it there yet. And that's another part of trading your strategy, guys. I mean, if you've got a good trade idea and if it looks like it can meet that trade idea, then you need to let it play out. Too many traders out there take profits way too soon. They see that they're getting a little bit in the green and they go ahead and take their profit. And then if the move does work out in your favor, if I had taken that $150, then if it had gone all the way down here, which it eventually did when the SPY started pulling, but on this move right here, I'd be kicking myself for not waiting for the full $400 move. So yeah, sometimes it goes against you. And I ended up down 163 on that one. The where I could have kind of done this a little bit better is, and I actually could have managed this better. I could have gotten out break even right here. I saw that it popped up through VWAP, but then it slammed down, which made me think that, and it closed here below VWAP on the 5 minute. And that made me think that, okay, this is about to roll over. It's a VWAP rejection. But then when it started buying back up and cracking through VWAP again, I should have gotten out here at the break of this 5-minute candle. And I would have gotten out basically break even. And then that would have put me up closer to $700 on the day today. But anyway, you can see, guys, I had another good trade on LB. LB actually caught it right up here at the top. It looked like it was, kind of getting a little exhausted up here, and I went short 400 shares at 25.62, came all the way up. I had a stop set for the break of $25. It never popped up past $24.96. So it eventually came down, and trust me, I was tempted to get out. I was tempted to go ahead and take the loss, but I'm glad I didn't. Again, you set your rules, you set your parameters, and you follow them. Okay? If I'd gotten stopped out, I would have gotten stopped out. But it came down, it cracked through, and I started taking profits all the way down to VWAP. And then I had to get out break even the last 100 shares here because I was actually holding that last 100 to see if we could get a move down here to the 2370s, 2380s. But it popped back up, and I got stopped out here, break even, just a little before break even actually. And then we can see that it actually ended up resolving down in that direction later on in the day. So there was another trade. Actually, somebody had kind of alerted me on this in the chat today during the live stream, but I saw this. I came in and I saw this move, and it was kind of getting pushed down by the bears up here at the top, and as you can see, it was kind of near the highs of over here. So it was kind of testing those highs, and it's like it broke out past these previous highs, but then kind of got slammed back down, and then sellers started stepping in, and that ended on a red doji candle, and then this red doji candle ended, and then as it started coming down, I went ahead and got short here in anticipation of the break here at these two previous candles, and had a really nice move down and took profit right below the crack of VWAP. So, or maybe it was right at VWAP, but nonetheless, I got a full $2 move on just 100 shares. I only took 100 shares, and I almost took 200 shares on this one, but look how far down this one ended up going. I mean, this easily could have been a $400, $500, $600 trade, but you know what? You can't worry about it. I mean, I let it go to my profit target. I held the full 100 shares for a full $2. Okay, so. But anyway, as you can see, we had a good day today, and guys, we're going to get back in here tomorrow, and we're going to just continue chipping away, and hopefully, as many of you follow me on this journey, we'll start turning things around here and building this account up a lot more, and just proving that trading with a conservative share size and not necessarily inviting all these crazy indicators into all of your charts, using a conservative amount of trading indicators on our charts and using a very conservative style strategy, hopefully you guys will be able to see. And with a conservative account size, you don't have to have some huge amount of money to day trade. Okay, hopefully I'll be able to prove this to you guys. And so thank you for watching, and I'll see you tomorrow. Take care.